welcome to another edition of Coin News Extra Interview Session. It's a program where we invite innovators, stakeholders, influencers in the blockchain, crypto, and fintech ecosystem to come their view. So today we're going to be talking about investment in tech-focused startups, impact, and future. So that's what we're going to be looking at, and we have a guest who's joining us to have this conversation. Before I welcome my guest, let me first of all take us through, when you talk about investment, with looking at tech-based investment, we see how important and critical it is, this sector, and what this sector is really contributing to every nation's economy. And also, I urge you to do well to like and share this live broadcast, because we are live across 4 channels. We are live on YouTube, Twitter, Facebook, and LinkedIn. And also do well to follow Coin News Extra across all social media platforms at CoinNewsExtra TV. Also, let me welcome our guest. We have a guest, Davidson Oturu, who is the managing partner, Nubia Capital, and also our partner, ALS. You are welcome to the show, Davidson.
Thank you for having me. How are you doing?
I'm doing great. How are you doing today?
Awesome. Nice.
Yeah, thank you very much. It's our pleasure to have you on the show. So it's very, very important that we really talk about this particular topic, investment in tech-focused startups, impact, and future. So we're going to go for a short break. When we return, I'll be able to ask you some of the questions that we have. Do not go anywhere. We'll be right back. Welcome back to the show. It's still CoinNewsExtra TV interview session. So we're talking about investment in tech focus startups, impact, and future. So let me ask Davidson, what do you think are the main reasons behind the recent surge in investment in tech focused startups?
All right. So I would say that there are many reasons anyway. So you're probably familiar with that statement where folks now say that tech is the new oil. What they're basically saying is that you could say arguably tech is a booming industry now, just like what you had with the oil boom, when a lot of people were involved in oil and they were making huge profits out of it. So now tech is like that thing, the in thing where if you get invested in it, you could probably reap your returns. Now, one thing that we saw over the last few years was a lot of startups were coming in with very high valuations, especially during the pandemic. You saw people who would probably have a valuation that is 20 times their revenue, and that didn't make a lot of sense. So investors were a bit worried and concerned, but I would say over the last 2 to 3 years, there has been a shift. Valuations are beginning to come down more. What this now means is people are now interested in investing in startups more than they were before, because the entry point is low for investors, unlike before that was very high. So 2 things has happened. Founders want their startups to be highly valued, but investors are not going to come in at such high valuations now. So that means more investors are willing to come into the market, unlike it was before. Then, if you look around Africa and even other parts of the world, digital transformation is a really big thing. Problems will always exist. And what technology does is that it gives the opportunity to scale over some of those challenges that you may find. So you may have infrastructural deficit. You may have healthcare that is not sustainable. With technology, you can now have cutting-edge healthcare. You can have fintech and financial services that are delivered swiftly, better than you could ever have with banks. Again, so that's another reason why you're seeing that surge in, the investments in tech-focused startups, because the ripple effect of that is the investors can make more money from the system where the startup is successful. I mean, look at the likes of Google and Amazon. They were small startups when they started, but now they're worth billions of dollars. They're arguably the most valuable companies in the world, worth billions of dollars, and investors are able to take in money and put in money. And they've now launched their IPOs through the years. So they've gone public now. So those are the potentials that you see in the tech ecosystem, and it's quite encouraging for investors to put their money in that game.
Okay, seeing the influence of these investments, are investors really patient? Must ask, are they impatient when it comes to cashing out from these investments?
Hmm. Well, so it depends, right? There's a term that is used in the VC space and even in the impact investment space to patient capital. Some investors are ready to play the long game, willing to exit maybe 7, 8 years after their investments have come in. And I think that's the best way for you to be able to play in the space where we find ourselves in now. Investing in startups is a high risk, high reward proposition. There's the potential that the startup will fail. If you've looked at statistics, there's this thing where, they put out data that shows that 1 in 100 startups are probably the ones that get through. So you need to be patient enough and do your analysis, proper analysis on the startup that you intend to back. Because if you're willing to take on that risk, then you have to be patient so that you can reap the returns at the end of the day. Amazon took so many years before it broke even. Even when it was already getting to a valuation of up to $1 billion, it still hadn't broken even yet, which means that it still wasn't yet to make a profit. So if you were an investor in Amazon and you were thinking that in 5, 6 years you would walk away with millions of dollars in investments, that probably was going to happen to you. So that patience is required. Will all investors be patient? Definitely not. But I would say that's the name of the game now. And for anybody who is looking to um, you know, derive the best benefit from most of these founders, that would say the investors will need to learn patience along the way.
Okay, interesting to hear that because I know it takes a lot of time for most of these projects to even get to the one that is everyone is looking at the unicorn status and all that before going public and the rest of them. So, some having seen all these investment coming into the tech ecosystem, what will you say? How would you assess the impact this has really made in the ecosystem and the economy of nations in general, with Africa in focus?
Okay, so I would say that it has a ripple-on effect in several areas, and I'll break some of them down. When you have investments coming, what it then does is that it provides an avenue for these startups to, of course, naturally get funding, right? Um, if you've ever dealt with most of these startups, you would realize that they're either trying to build or improve on existing technologies. What that means is they require money. There's no way around it. So if you're going to do research and development, for instance, if you're going to move beyond your minimal viable product, if you're going to launch in the market, you definitely need money. You need money to pay the engineers, the software engineers and the other people, product managers, the other people in the value chain who are trying to, build these new technologies and products. So the first thing that you will see that happen is that the investment promotes innovation and increases research and development. It also finances the development of new technologies and new products and processes, that can directly influence the economy at the end of the day and the tech industry. You cannot build those things. You cannot pay the engineers. You cannot pay your product managers if you don't have funding. And what this investment does is that it creates that avenue. Now, another thing is, if again you're in that space, you realize that there's always need for training, skill enhancement. Even the founders too, they need to raise their own business acumen, because the way that they probably started 7 years ago is not the state of the market. Even their engineers too need to go for training and upskilling of what they already know, so that they can keep creating new things. Again, that requires money. And what you would then tend to see with some of these investments is that it opens up the possibility for them to fund some of these enhancement of their skills and to keep growing. Now, in terms of the economy in itself, when that funding comes in, what then happens is that most of these startups are able to create jobs, because if they are bootstrapping, basically struggling and straining their resources is already used up, it can barely take care of their own needs. even if they want to go to market, they wouldn't have people who can help them promote their their products or services. They wouldn't have enough developers that can help them build what they need to do. So when those investment comes in, it then enables them to employ people, which they couldn't do before, and again create jobs. What that then does is that there's again that same ripple effect, because you then create wealth. As you go to market, you then sell your product and services, thereby generating revenue. You make profits, you break even. There's return on investments for the founders, their employees, and even the investors as well. What a lot of startups now do is they have the employee share option plan, which enables employees to subsequently take up shares in the company. Now, you can only bring in employees to take up shares in your company when you have funding, and then those employees can subsequently then decide to build their own businesses with the funds they would have raised by reason of being employed, as well as the skills that they would have generated. And all of this comes because in the first place they received funding. So that's what I mean by the ripple on effect. And eventually what that does is that with job creations, products going into the market, new innovations, there's the possibility of also importing some of these skills to other parts of the world as well. So it's the benefits are, they are immense, in that sense. And most of this just comes from investments into that space, which we'll keep seeing over the next few years.
Yeah, interesting, because most especially in this time of recession, and we see how the economy of many nations are doing now. We see a lot of startups still having to employ people. Even there are also layoffs that are happening, and that's also another negative impact of that, the economy when it's bad. So you have a background in law, and also you're a legal practitioner. So recently you got this appointment, or how will I put it? Your position as a managing partner, Nubia Capital. Nubia Capital, they mostly invest in tech-focused startups. How do you intend to make impact with this new position?
Thank you. So yes, my background has been in law. I mean, I've been advising a wide range of startups, on areas involving funding, regulatory compliance, protection of intellectual property, how to license their technology, for those who are building their websites or their platforms, for the fintechs who are trying to go to market, basically advising them on their licensing issues, and a host of other startup related issues. So to a large degree, I would say I know the pain points of most of these startups. I've also invested in a number of them through some angel investment vehicles. I'm invested in a recycling startup, about three fintechs. So I would say to some extent, I do understand what they go through. Now, on the policy related side, as you may be aware, I led the team that drafted the Nigeria Startup Act, and I was also part of the committee set up by the Securities and Exchange Commission to create a framework for the use of fintech in the capital market. So I would say to a degree, moving into this space, I think is an advantage, for the ecosystem. I have a level of empathy already for startups, so I do know where their struggles already exist. I mean, for folks in the blockchain and cryptocurrency space, they've also, served as a helping hand to some of them, try to help them secure funding, try to also advise them around their technology and how they can operate in the Nigerian market. So I would say that coming into this space now allows me to not just guide them through their hands, but also fund them effectively. Nubia Capital is focused on growth stage startups, which then makes it easy for us to work with where they already are, having already gone to market, having already put out their products there, to take them to the next level. And I'm excited about the prospects and opportunities that exist within the space.
Interesting. You said earlier on that you've been able to advise some startups in the technology and fintech space, and that's interesting. And that brings me to our next question. What are some of the biggest challenges you've seen, having been there, been close to them? What are these challenges that most of these startups face when it comes to fundraising?
So, I mean, that's a very that's a very interesting question. I would say that there are a number of reasons. Number one, you may think you have an amazing product or an idea or a business model, but the question is how scalable is it? Without scalability, it's very unlikely that you would see a lot of the investors. Investors want to be sure that your business model shows the potential to increase revenue with minimum expenditure. So most times when you're trying to invest in a startup and you look at their financials, right? Some of them have them all over the place. It's not just enough again to even show that you have revenue. There must also be um, there must also be net profit that is being generated by the business. And if this is a challenge, then investors would be reluctant to come in. Again, if you're involved in sales, right, there has to be the level of certainty that you're not expending more money in trying to acquire customers. Sometimes I look at some of these startups and their pitches, and you realize that to acquire one customer, requires so much money. So the question is, how long can you sustain that sort of business model where you're spending so much just to acquire a few customers? Then I think sometimes valuation is always a problem. You see people coming in with over bloated valuation and they feel reluctant to scale down that valuation. Why? Because they feel that Mr. X, who is doing something similar to them, has a valuation of $20 million. So why should the valuation not be the same? But you have to be very pragmatic and practical around some of those things. Then I would say some of them have also exposed themselves to a lot of debt. So somebody comes in and his financials don't look very encouraging, and so um, an investor would be reluctant to also go into investing in them. Another thing that you also need to understand is that investors most times are looking at not just one business at a time. They're looking across multiple businesses, and they have to ask themselves, if I put money into XYZ, which one of them am I likely to get the best return with the minimal risk? So when you weigh most of those variables, you then need to decide on which one you would intend to go with. For some of the startups, they may have great ideas. Maybe if they're able to get funding from angel investors or from families and friends, and move beyond that stage, then the venture capitalists may be willing to invest in them. But if most of what they're putting forward looks like projections, I'll give an example. If somebody was projecting that the elections would have gone a particular way, this person would become the president, or the governorship elections will hold at this time, handing over would hold. If your projections for the growth of your business is on that, and all those variables changes, then it probably means that you're not going to make money at all because you were backing the wrong horse, basically. And that's what we see sometimes, projections. The level of pragmatism sometimes is required.
Thank you very much, Mr. Davidson. That is very informative. We have a program that is focused on investment. We are investors and our startup meet, and we call it Tech Words. Maybe we can come on that show where we have enough time to discuss very elaborately.
Sure.
Let's look at. I have other questions here, and I also have some questions from our guests, from our audience. Before I ask the ones I have, there is one here from our audience. Is saying, "Does Nubia invest from scratch or already invested startup?" Another one says, "VCs some VC sometimes VC some things come to dry up, and I don't know what the person wants to All right. But I guess
Yes.
it's trying to say sometimes VCs try to drive up the company. Are there legal ways to control bad VCs?
Okay. Okay. So thanks. Can you hear me? Yeah. So
Yes, I can hear you.
yes. So I'll start with the first question. So we don't invest from scratch. And top of course. So Nubia Capital is the venture capital arm of a private equity firm in the United States called Barra Capital. So Barra Capital has been invested majorly in North America, but with the activities happening in Africa and Nigeria, Kenya, South Africa, Egypt, for instance, being at the forefront of the African growth. Of course, you also have Rwanda, Tunisia, and a few others. Um, they looked at the need to have a venture capital firm that would be Africa focused. Hence why Nubia Capital was set up. In terms of investing from the scratch, we are not doing that at this time. We'll probably do that maybe in the next 24 months, thereabouts. But at the moment, we're focused on growth stage startups, startups looking to adapt Series A to B, C, D, so cutting tickets from about 5 million US dollars and upwards. We have a range of even up to 50 million, depending on the growth stage of the company. What we do though is we work with other um, impact investors, for instance, or VCs that cut smaller tickets. So if there's anybody who has those kind of businesses and the models are good, we can actually work with those folks who will be willing to invest in the early stage, and then if you grow to the point where we can come in, we'll be more than happy to come in. But at this stage we are focused on growth stage startups. For the second question, whether they are bad VCs, I guess like any other thing, whether it's in law, whether it's in medicine, whether it's in politics, you have the good, the bad, and the ugly now. So they are bad VCs. But what you can then do to protect yourself is, and good thing that you mentioned legal ways. I mean, with my background in law, I've had to consistently help some of my clients to protect themselves. One of them recently, funny enough, he's in the blockchain space. He told me how they were trying to bring in an investor. In fact, they had even reached advanced stages with the investor. And I said, let me look at what you guys are even discussing. He sent me the agreement. That investor was going to bring in money, and in 9 months' time was going to kick them out of the company. I mean, and it was as clear as night and day. But to them, reading the agreement, they didn't understand it. They just thought, oh, somebody's coming to give us money and this will happen. So the best way to control bad VCs is to have good lawyers. That you have to have your checks and balances now. And the thing there about signing most of these agreements is, of course, you the expectation is that when you are given an agreement and somebody says he wants to fund you, you're supposed to read the agreement. If you don't understand the agreement, get your lawyer to read it, so that, because when you sign the agreement, it then becomes a binding document, and you cannot now claim that I didn't know what was there. You took it up, and the way the law looks at it is that if there was no fraud, duress, or misrepresentation, then it means that you are bound by the terms of that contract. So the only way you can protect yourself, really, to the best of your abilities, is to have the right type of advisors that can guide you and let you know, how to protect yourself adequately. The fact that a venture capitalist wants to take up majority shares in your company doesn't mean he's a bad venture capitalist. So that you also don't get it wrong, because he's probably looking at how he can manage the business and ensure that it's on the road to productivity. But you need to get
Thank you.
sound advice.
Thank you, Mr. Davidson. Because of our time, so sorry to cut you short there.
How many
Because
more
of our
minutes
time,
do we
I have
have so I can
yeah,
manage
just
my?
we have like 3 minutes. So what I'm trying to I have two questions I'll ask together here.
Okay.
How what role do you think government can play in supporting tech focused startups. Another an encouraging investment in this area. The last one is, do you think this trend, how do you see the trend of this investment, the future of this tech focused startup investment?
Okay, so I'll try and do
Just
them
in
in
three
one.
minutes.
Yeah, sure.
Yeah.
So for what government can do, I'd mentioned the Nigeria Startup Act, which I earlier referenced that I had drafted. Now, what that law can do is that it can change the ecosystem and provide the right environment for startups, which was why the law was crafted. There's a labeling process that is under the act, which basically says that when you come under the labeling, you then have a level of government protection. So you then get tax incentives. You get a couple of incentives that are out there, and you typically struggle to get. There's also a minimum of 10 billion naira fund that is being set up as well, and being able to access that means that government is able to invest in Nigerian startups, especially the early stage guys who would typically struggle to find funding. So there's a lot to unpack in the Nigeria Startup Act, and I think over the next few weeks I'll probably be explaining a few things on my LinkedIn, on how early stage guys can access that. Now, the trend of investments in tech focused startups. I know that this is coin news extra, but I know that cryptocurrency is going to be affected sort of negatively. I think we saw some bullish trends last year with the FTX. Folks are questioning the relevance of NFTs and a few other things. Bitcoin will still be relevant because it's a store of value that is not going anywhere soon. But I think some of the fanciful things we've seen over the last few years in the blockchain and cryptocurrency space would need to be stabilized. We're going to see the rise of AI, Chat GPT. We've seen what is happening, with it now, and all the other guys, Microsoft, Google, they're all getting involved in the AI space. Fintech will definitely thrive, and the likes of EdTech, health tech as well. So I'm seeing billions of revenue coming into Africa over the next few years, and it's an exciting time for everyone. Sorry, I
Investment
can't hear you.
show. Can you hear me? I said that thank you very much. I'm talking about the investment and Nigerian Startup Investment Act, which you said you publish on your LinkedIn. Maybe after that, we can also have you on the show, on our investment show, where you can even throw more light on that. So it has really been an amazing conversation with you, I must say. Davidson, Oturu, managing partner, Nubia Capital, and partner ALS. Thank you very much for coming on the show.
Thank you so much. Glad to be here. Looking forward to other conversations we'll be having.
Okay, thank you very much. For our audience, we really appreciate you bringing out your time. I hope this was really informative. Thank you very much, and also do well to share this live broadcast so that other people get to see it more. Thank you very much. Stay tuned for other of our programs that we have today. We still have a panel discussion on the importance of emerging tech on Nigeria election. Also, we have week in views. So do well to join us then 2 p.m. West African time and 4 p.m. West African time, respectively. Thank you very much, and see you next time. Bye for now. Welcome to TechWells. We can see how investment can be for a startup, even for the investor that is investing in any startup. Join us every Friday, 12 p.m. West African time, as we discuss everything about startup investment in the world of blockchain, crypto, and fintech in Africa. Only on CoinNewsExtra TV.